All right, guys, Eric here. So we're pretty much done with all these workshops. It's the last one I'm gonna put up here for us, and this one's gonna be really, really easy. We're just gonna touch on pretty much what you should be doing after the trade. This is to help you guys get in, to some better habits to help yourself become a better trader, to where you can, do this full time, or you can, do this wherever you want, and not be so stressed out. So we'll talk about that in this video here, and we'll recap. Pretty much the last trade of the month. Great month again. Overall, September's done. Now we're moving into probably one of the best times of the year when it comes to trading. So, let's get ready for that. But yeah, so overall, hopefully these workshops, helped you guys out. A good, 15, 16 of them. So I'll do this one. I might do one more tomorrow if I don't touch on everything that I want to touch on in this video. But after that, we're good to go. I don't know, every now and then I'll drop some nuggets, so, I won't really post those like in a group or anything like that, but I'll, throw them on YouTube or whatever. You can check them out then. For you guys in the course, we'll still be going over stuff in much more detail as we do that and stuff like that, so, don't worry about that. But every now and then you guys will see me drop some, nuggets here and there when I'm bored or not doing anything or not traveling or whatnot. So, with that being said, hopefully you guys had a great September. If you didn't, another learning experience, and there's more months to go. So, the market never stops. You got time. Practice, 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 and get better at this stuff, okay? So, without further ado, let's go ahead and get into it and recap this last workshop. All right, y'all, let's go ahead and get into this trade review, and we're gonna wrap up the rest of this workshop here as well. All right, kill two birds with one stone. So let's jump into the trade today. The only trade I took today, PALT, knocked out 500 shares of that bad boy, and got a little $1,500 gain today. Ain't too bad, ain't too bad. So I'll take it. You know me, the goal is $1,000 a day. If I get it, great. If I get more, even better. All right. But you know what? You can't be too greedy, especially not in this market. So let's just talk about this trade here. Let me see if I can actually pull up the alerts too. Try to follow it along. I wonder, let me see here. So PLT guys, I also traded it yesterday too. That's pretty much my little golden child of the week, I guess, if you want to say so. Um, I believe I had took it off the watch list, but it was still alerted. Let's take a look here. All right. All right, so here was the watch list from last night. CI was definitely still on there. So congrats to you, who are still killing it with that bad boy. So yeah, PLT wasn't on there, but we was alerted that it spiked in volume at 810. And guys, just like I said in the last video, I am not just running and jumping into the first alert. Okay, you gotta look for the setup, your setup, whatever you like to trade. Find it, stick to it, execute. Don't let your emotions get in the way. Be robotic. Okay, that's how you survive in this game. But anyways, we were alerted. Hey, the volume spiked like 5 o'clock. Like 5 o'clock, I think when that happened. Yeah, which was right about here. Okay, so yeah, and this is the action during pre-market. Clearly, it wasn't much going on volume-wise. Pretty light pre-market. So that kind of caught my attention, especially since it was a former runner from yesterday. And didn't I tell you guys yesterday? I said, hey, don't be surprised if after hours, it goes back to 10. I said that yesterday about it doing that after hours, but it didn't. It just stayed dead. So when something like this happens, and volume spikes happen, it catches attention, especially something that just went crazy yesterday. Naturally, that's going to bring in more and more traders to come look at it again to see if it does anything more. Continuation happens a lot with stocks that run. So don't discount that at all. But anyways, the alert went off, so it's on my radar. I'm paying attention to it. It's moving and it's moving and it's moving. I'm like, oh man, this thing, we might have another runner in our hands here. So at this point, I'm looking at that, which is fine. You know me, I'm gonna wait for my pullback, right? waited for the pullback in the moving average convergence divergence. So it established a new low. I'm loving that. That looks great, you know. And at this point, I know it's eventually got to curl up again. So we sit there and what happens? It does it again. So I enter in, I jumped in at like 10:57, I think it was. And that was a pretty good, pretty good entry. Could have been better, but you know what? I'm $2 off. I'm not gonna cry about it. So I enter in my little 500 shares, watch it as it goes along, and then the bell opens and it sinks and it sinks and it sinks. Now here, my risk to reward ratio here was like, $1 to $2, honestly. Had this thing, in my mind, had this thing dropped a dollar, like down to like roughly around 9.50, I would have got out, but it never did. And again, that was just my risk tolerance, which is why I was able to, you know, make so much off of this. So let me kind of break this down for you. Whenever we get alerted of, a stock doing something, and if it's something that might catch my interest, and I'm already planning on entering that trade, part of my planning is measuring my risk to reward. From there, I'm going to determine how much shares I'm going to, you know, get into this trade if I decide to get into it. Now, keep in mind, my strategy has already been, the way I do this has already been tested and tried with me, which is something that you would need to do as a trader, especially if you're beginning. Um, what was I going to say? Oh yeah, so it was like a 1 to 2 risk to reward ratio, and I was going to let the rest ride, especially since it was pre-market. Didn't want to get too greedy. Had it dropped a dollar, I would have got out, but my exit point was going to be $2 to $3, basically, like a 1 to 2 ratio there. Risking one to make 2 to 3. If you don't know what I'm talking about, go look at risk management, videos when it comes to trading. In the Learning Lounge, guys, I put a whole bunch of good videos about doing that. So take a look at those in the Learning Lounge. But anyways, that was my idea. Now, all this time that this was happening, I had a whole what? Because a lot of you guys think this has to be some type of fast type trades. It doesn't. My execution has to be fast. I like that. That's why I have the hotkey set. But me planning my trades doesn't need to be super fast. In fact, I get very impatient because I have to actually wait for it to do what I need it to do in order to, execute my trade. My execution is fast, but the planning, you know, isn't that fast. You got to wait for your right moment. You're entering your exit. So let's recap this. Alert went off, right? It rolled up. My thing is to wait till, my strategy is to wait till it comes down, then jump right back in. So I'm at this point here, I'm planning, okay, we're holding it at $10. My risk is going to be 9.50 if it goes back down, but if not, let it ride. If I'm anywhere in between here, let the stock play out. I'm okay with losing that dollar. Okay? That's me. If you can't do 500 shares, chop it down to 250. You can't do that much, chop it down to, 100. Ask yourself, am I okay with losing $10, $20, $100? At the point you start to feel like, ugh, I don't want to risk that much. Okay, that's your limit. All right. So hopefully that helps you with trying to identify your risk to reward much quicker. Always ask yourself, what am I willing to lose if I take this trade? The more you do that, the more you're going to understand what your risk tolerance is and be able to adjust your shares accordingly. Okay. That helped out a lot of people who were like new and trying to understand that. The reason why you need to do that is because of the psychology aspect behind yourself and trading and letting the trade play out. I promise you guys, all this stuff that I'm talking about does tie together. As we're doing these workshops, some things might be skipped or overlooked for you. It's a lot to go through, especially in 15 workshops. Um, but again, that's what the course is for. To go to all this stuff, you go through all of it, and it's all put together for you. But anyways, that was my risk to reward management. So then I got, was in this trade the whole time. Didn't panic here when it came down. The reason why I didn't panic because this is a normal part of the moving average convergence divergence. And if this is establishing a new low at $10 and I'm entered in at 10.50, you know what? I'm okay. I mean, it's just part of the game, Um, that was like I was down $250 at this point, and this is opening bell. But then guess what? And then it got halted. Boy, was it a smile on my face. I mean, I posted in the group. I was like, man, I'm tired of getting stuck in halt because I'm always as momentum traders. Let me see where I put that. As momentum traders, guys, you got to remember with the volatility and stuff like that, you're gonna get stuck in halts. It's annoying, but It's also part of the game if you don't really know what you're doing. Where did I say? I think I said somewhere. I was like, man, I'm tired of being stuck in halts in the chat room we were talking. I don't know, somewhere around there. But it was good. Where did I put that at? Anyway, don't matter. Whatever. Let's go back to it. It was halted. We got the alert that it was halted, and when the halt broke through, I waited a little bit more. I'm not gonna lie, I got a little bit greedy there, just because I was already in the green up a dollar. I was okay with like if this thing began to tank back to where I was just gonna get out, but it never did, and it held some more support. So as you can kind of see this, guys, my strategy in my trade is changing as the trade changes. Sometimes you have to do that when you become a little bit more advanced and understand your strategies and you build on it. If you don't even have a strategy yet, stick to one part of your trading strategy and focus on fine tuning that. Okay. So let's put this in replay, and I'm gonna walk you through the whole thing. Let's start from pretty much when it was alerted, so you can kind of get a glimpse real time. This is what I'm seeing, and this is what I'm thinking. Okay, so you can kind of know. Where we at? September 30th, right? Yeah. So, 5 o'clock, we get that alert that it spiked at $8.88. It was like 458, whatever, close to this time. Anyways, we got that spike. So I'm looking at it. Okay, great. Now this is real time. This is why I like trading view doing this little replay. So this is real time. I'm looking at it. All right, great. And this is pre-market, so not much movement is happening. There's only like what, maybe 2 or 3 stocks at this time that's moving. So naturally, this is going to be on your radar. So I'm looking at it, and let me zoom in so you can kind of get a glimpse. And then it's breaking another high, 940. It's over 10. So at this point, I'm like, okay, great. Wait till, it got over 10. I'm like, okay, great. And then it starts to pull down. Now, this is where I'm looking at it. So I'm like, okay, there's some support holding right here at $10. That's good. All right, perfect. But I know for a fact it has to come down some more, even though it's overextended in the RSI. It's, coming down to the bottom end of the moving average convergence divergence, which means either some support is going to come here or this thing is just going to drop because it was a fake out breakout. Okay? One of those two things are going to happen. Oh, look at that. Oh, this thing's broken. All right, get me in. Boom, I get filled at 1057. My risk, of course, at this time too, while I'm looking at this, I'm like, okay, if it does, break out again, I'm going to go ahead and, get out at a dollar, roughly where the dollar mark is for the volume weighted average price right here. This was all during this time I was thinking that. But, I'm in it at 1057. It starts to go up. Oh, it broke 11. Sweet. So now I know that other traders are going to be looking at this in pre-market. I'm looking at volume. I'm looking at level 2 at the same time. I usually have level 2 pulled up on Webull right there, as you guys see a lot of times on the charts. So level 2 is looking good. It's holding steadily. It's holding steadily. I'm in the green right now. I'm up 50 cents to the dollar. I'm up like 250 or something like that at this time. Maybe like 300. I'm okay. I'm all right. My risk to reward ratio was there. I don't like to look at my P&L when I'm trading because that plays into the psychology and emotion of me trading. But I know that's pretty much where I'm at dollar wise in my head mentally. But anyways, so now it's starting to come back. I'm not getting worried. I'm not getting greedy because I know, hey, this is the moment where it has to come down. Now, also, I'm keeping in mind the bell is about to open. We were in the chat room just kind of talking. That's why I think I said good morning a little late because I was in a trade still. But anyways, I know at this point one or two things that happen at the bell is going to either snap or it's going to fly. The way this is going right now, the odds are kind of in my favor that it can continue to go up. So I'm okay with staying in this trade at this point. I'm okay with holding this through the bell. If it falls, it falls. And then, of course, this thing, that part kind of shook me. I'm like, okay, nope. But look, I'm down, that's fine. If it doesn't hit 950, stick to the plan. If it doesn't hit 950, then you're fine. All right. And now it's getting closer and closer. I'm like, ah, but I'm also still okay because I see for the fact that, hey, if it does touch down there, it's part of the moving average convergence divergence.
And so that's okay. But then this happened. I'm like, oh my God, yes. Oh, that's beautiful. That's beautiful. And then the halt happened. Here's the halt. Then it opened back up. And now, next thing I know, I'm up, almost a grand at this point. And, the moving average convergence divergence is high. RSI is high. Naturally, it's overextended at this point. Level two is looking good. This is the beginning, the first hour or so of the bell opening. Like I tell you guys, is the most important part. Traders are looking at it, so that's even perfect. Now at this time, I'm up, so much. I'm like, okay, I need to go ahead and get out at this point. Take my money and run, And so I go ahead and cash out at like 13 and change. So I took my win. That's fine. Watch it the rest of the day. Um, because again, remember my goal was the 2-to-1 ratio, right? But again, of course, you want to let your winners win. So, at this point, $2, I'm up $2 versus the $1 that I was gonna risk. You see that, guys? I'm risk reward ratio was 1 to 2 here at this point. Willing to risk this going to 950 to take my profits at 1250. Well, how do you know that the stock is gonna run that much? I mean, really, you don't. I mean, this momentum stocks, you gotta kind of anticipate, looking at things like if shares float, um, different catalysts and things like that to consider whether or not a stock might run. Also, you can look at things like support and resistance. Another thing, when I'm planning to enter my trade, I'm looking at previous levels of support and resistance. Why did I, another reason why I chose 950. Look at, it's a good level there. It's a good level there, resistance that broke. So, I mean, that's a good way to manage risk. You don't want to just wing your risk to reward ratio. You want to take a look at support and resistance from previous times. And I know with this last rally that we had, this was a good level of support, this was a good level of resistance, and so on and so forth. So you kind of can figure that stuff out, um, however you want. But anyways, that was the rest of the trade. Let me speed it up a little bit here. You pretty much just watch it throughout the day. Obviously, it's tanking at the point that it's below the VWAP. It's in bearish territory now. It's going to be hard for the bulls to win unless a rally happens. If you don't see no volume spike where it's crossing the VWAP, just know that you'll be good shorting this thing. Okay. Um, but yeah, that's pretty much how the trade played out, guys. So good little recap there. Hopefully, that helped you out with trying to understand my thought process behind the trade. That kind of really tied everything together, to be honest with you. Um, so, you know, that was it. Good day, good trade, good $1,500 in my pocket. So I'm not gonna complain. All right. So we are done with reviewing that trade. Now let's go ahead and get into the last little bit of this workshop here that I want to talk with you guys about. And this is a most, I would say probably one of the most parts of trading that has greatly, greatly helped me improve my trading when I first started out. And I know it's one of the more boring parts of trading, but I promise you it's the most crucial part of trading and becoming a better trader. I, for the longest time, I thought it was stupid. I thought it was dumb. I didn't even want to do it because I was more focused on making money, winning trades. I wasn't really focusing on trying to get better. But when I began to read more books and just kind of maybe watch a little bit more videos, not too much because at this time I had already, a good foundational knowledge of trading. But as I began to read more books and see what other successful traders were doing, one thing I noticed that I wasn't doing that they were doing that was this. And that's basically keeping a trading journal and reviewing your trades. Now, obviously, of course, I don't do it that much anymore because I'm much more better at trading than I used to be. Um, and sometimes when I might go on a cold streak, I might do a trading journal, but for the most part, I don't need to do it anymore. But if you're new and you're starting out, if you're not at least, you know, 3 years in full-time season, and this is just my recommendation, if you haven't been trading for 3 years full-time consistently, then you should be doing a trading journal because that's usually that was pretty much when I stopped doing after I was like 3 or 4 years within, trading full-time. Um, that I stopped doing it because I began to become more consistent at trading. But if you're not, and when I say full-time, I mean full-time. I mean sitting at your computer 16 hours a day from pre-market to post-market, you know, executing trades 252, days of the year. If you're not doing that, you need to be trading with a journal. Okay. Now, when it comes to doing your trade journal, and I'll break this down for you guys, and I'm also going to break down after you do your trading journal, um, pretty much how you're going to start your next day. So this is going to be within that. So this whole part of this workshop is after the trades. Okay. So this is what you should be doing after your trading is completed, and also be planning for your next day of trading. All right. So we're going to go through all that here in this workshop. So this one's going to be probably a little bit lengthy, but hopefully not too much. I don't want to keep you guys for too long. And I know, probably YouTube be trying to send you guys commercials. So like, hopefully not, because hopefully we won't have so many subscribers that they start trying to monetize my videos, but they might. I don't know. I don't know how that junk works. You guys know I'm not huge on tech anymore like I used to be. But anyways, so let's talk about first things first. So let's say this is after the trades, right? Your trading day is done. You have no more trades to do. There's nothing else you can do. You're done for the day or done for the week. Time to do the trading journal. Now, there's a few different ways to do that. One way, you could do it like the manual way. This is the way I did it when I first started out because I didn't really know about the options that I had to do it. But the first way you can do it is simple. Making a simple Excel spreadsheet. And in that journal, you want to have like the date, the time of your trade, the tickets, the trades that you traded, whatever symbol it was, your entry points, your exit points. You even want to have your thought process. I know it seems dumb, guys, but you want to have the thought process, what you've seen. You want to have a link to the chart, or have a picture of the chart next to your trade and how it looked. You want to have the time of day that you traded. You want to get very, very meticulous about this. Why? Because even the littlest thing could be the reason why you're either successful with your trades or not successful with your trades. And to kind of give you an idea of how that looks, let me actually see if I can pull up one of my old ones here for you guys. Let me see here. Let's take a look at this. Yeah. So this is like one of my old trading journals that I used to keep. I mean, like I said, when you don't have everything, you want to have things like I said, date, the broker, the stock, the entry, exit, time of day, what type of trade it was, what strategy you were using. You want to get more detail with that. Obviously, this was like in the very beginning for me. This was like 2008. Good God, I've been doing this for a long time. But you want to have a picture of the chart for you, like right there. I have a picture of the chart. Links to it when I started doing that. You want to have entries, exit. You want to have why you entered. You want to have why you exited. I mean, you want to have little notes. You want to have top gainers. I mean, there's so many notes you want to take throughout, your trading journal. Um, so that's just kind of giving you an example. In fact, if you guys, if you do want an example, or if you want the format of my trading journal that I had from Excel, um, put a comment below, or put your email or something like that. Message me. I'll send it on over to you if you want a copy of it. I'll give you like a blank copy. But basically, you would fill this thing out and go on about your day. If you want to take a look at it, review it, that's fine. I don't really recommend reviewing it daily, but it's okay. Like glance at it, like, oh, okay. Well, maybe if you want to make a note, you can. That's perfectly fine. When it comes to reviewing your trades, I suggest you do it once a week, definitely once a month. Just review them. Don't make any changes or anything like that to your strategy or anything like that. Just review them. At the end of the month, then you may want to start to begin to implement some changes. So let's kind of take a step back. Really, it's going to be I would say virtually six steps you're going to be doing. One, you're going to enter you're going to enter in your journals, your trade journals. Two, you're going to review them. Three, you're going to plan for the next day. Four, at the end of the month or end of the week, you're going to start to calculate your odds of success with your trading strategy that you're doing. You want to see how often you're in the green or how often you're in the red. Five, you want to review those changes that you made. Okay, or you want to review the strategy that you've done. And then six, you want to begin to implement changes to that strategy or continue the strategy, whatever you feel is best. Little side note, because I know a lot of you guys are, either limited on, you know, funds to be able to execute trades, which means you can only trade 3 times out of the 5 day, period, which is why I tell you guys to get multiple brokers to help speed that up. So the PDT rule can kind of limit you from being able to execute trades. But also too, you don't want to over trade, because if you over trade, you won't be able to focus in on what's, you know, causing you to be negative anyway when it comes to your trading P&L. So it's kind of a double-edged sword. You don't want to overwhelm yourself, but you also want to focus in on executing enough trades to be able to monitor and improve your trading. Okay. So we'll recap all this again in the end. But this is where this video is going to ultimately go, and then we're going to go into how I plan for the next day of trading. But anyways, do that trading journal. If you don't like doing an Excel file, let me show you another trick. And I'll put these links in here for you too. You have TradingView. TradingView is a great trading journal that will help you choose your trading performance. I'm gonna be honest with you guys. I mean, I don't like know the owners of this software or anything like that. Full disclosure, the link I give you guys will be like an affiliate link that I'll put in there. But it's free, honestly. You know, I mean, so I won't get nothing. If you don't want to use it, just go to tradingview.com. Perfectly fine. I'm fine with it. I'm just putting that in there because I've used them so long. They've gave me an affiliate link. But I don't usually, boast about it. I gave it to like a few traders in the beginning who I actually know personally who wanted to use it, but that's about it. But anyways, TraderView, I love it. It's free. If you want to look at the pricing, um, this is it. I mean, you can trade you can journal up to 100 trades per month. Now, most of you who are subject to the PDT rule probably can't do that. But the cool thing about TraderView is that you can also import your broker statements like that, so it'll be much easier for you to jot down your trades. I mean, but look, the features on this thing is great. It's very analytical, very great. Um, I I can't. I wish I would have used this much earlier in my trading. I'd probably be much better. In fact, it probably would have been reviewing my stuff a lot easier. And then they also have like pricing like a silver plan and a gold plan. Hey, that sounds similar to my stuff. But anyways, it breaks. It has different features on it. So yeah, guys, definitely utilize this if you want. It's free. Try it out. Just 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 do it. Okay, it's free. Why not? You know. But anyways, it's really good. Um, so that's pretty much. Oh, hey, look at that. Guy from S&P Capital talks about it. Huh. I didn't know that. I mean, I'm not on it no more because again, I don't need to trade. I don't need a journal for trading anymore. I'm more consistent than not. So, anyways, another one you can use too is Edgewonk, um, to journal your trades as well too. Same like TraderView, they have different versions available. There's like a light version and there's a pro version. It's kind of steep to be paying. Well, actually, 169 a year isn't that bad if you want to invest in yourself. You might like the interface on this one a little bit better. They got some good free courses too, I think, that someone told me about setting up your journal. If you want to check that out too. And full disclosure, not to do this either. But I've used these as well. I used Edgewonk as well too. I like TraderView a little bit more just because of the interface, even though the import is a little bit harder to do. This one does look smoother. To be honest, guys, to me it's just like choosing Mac or PC. Just whatever interface fits you better, just utilize one of them. If neither one of them works, you can always go to Linux. In this instance, Linux would be the trading journal that I have for you guys here. So just kind of think of it like that. But anyways, trading journal, trading journal, trading journal. Entering your trade, review all the aspects, even in these ones, you want to make sure you're notating the psychological aspect of yourself. Whether you were hungry, whether you were tired when you took the trade, whether you walked away for 30 seconds, I don't care. Whatever happened, guys, notate that in the journal. Okay? It is very important. One time I noticed like I was getting up at 6:30 a.m. Trading and trading, and this was like during a time where I was working like two different jobs, and my strategy was great, but the time of the day that I was utilizing it wasn't the best. So I had to start focusing on trading after hours and things like that. Because I was like either always sleeping, always tired, and I couldn't focus on certain parts of the trade that I needed to focus on. And I kept noticing that as I was reviewing my journal, like, oh, that's what I was doing then. That's what I was doing then. Okay. And it just helps shed light on it. So you're not repeating the same process over and over and over again. This is too much to do to try to remember this on your own. Trust me, it it's going to help you greatly. I thought it was a load of junk. But the only reason why I thought it was a load of junk is because I wasn't thinking of all the things that need to be put into the training journal. Okay? It's a lot. No human being can remember all this stuff that they need to remember when it comes to trading and journalizing because it's very not only analytical, but it's very psychological. That's why I said you need to not only know, oh, what your win ratio was, what your entry, point was, what your risk to reward ratio was. You also need to know how are you feeling at that time? Did you get enough sleep? Were you hungover? I mean, it's so much stuff you need to remember um, during that time. So keep a note of that. Remember, guys, 6 steps: journal your trade, review the trade, plan for the next day. At the end of the week, you want to calculate and review it, or end of the month, review the trades again, and then implement changes if you need to. Okay? And when you implement those changes, make sure they're small. You don't want to change too many things at once. You don't want to change the strategy all at once. You don't want to start changing your entry points at once, all at once. You don't want to trade, you don't want to change your exit strategy. You don't want to do all that at once, okay? Break it down piece by piece, week by week, month by month. The reason why I don't say do it daily is because when you review it daily, you're doing you're doing too many changes too fast. It's not like, oh, you can have a bad trade one day and think, oh, tomorrow I need to go trade this. I need to change this. Tomorrow I need to change this. No, because it's possible, very, very possible that you did nothing wrong and it's just the stock went against you. Sometimes, guys, it really is just the odds. That's why you need to trade that same strategy, trade the same way you're doing day after day after day after day for at least a week. I recommend a month, but at least a week. Anything shorter than that, you're changing too much stuff too fast to be able to measure what you're doing wrong. So hopefully that makes sense. All right. So after you're done journaling, doing all that good stuff, what's the next thing you need to do? You need to start planning for the next day. Now, Eric, how do you plan for the next day? Me, guys, what do I do? We got the watch list, the lovely, lovely watch list. So this is part of the review of the workshop that I don't really like to disclose too much on how I do this, but for you guys, since I love you, we're gonna go through all of it. I think I go through it in the course as well too, but we're gonna touch on it here now as well too. But basically, this is how I pretty much end the day. Once I'm done, you know, done trading for the day, I've made my journal. I need to start planning for the next day. Now, I don't mean doing this like right after I'm done trading. I wait for the market to close. Like right now, the market is closed completely. After hours is closed, and everything is pretty much said and done for the trading day. First thing I'm gonna do, I'm gonna look at what happened after hours. Why? Because as a momentum trader, you need to see what stocks are moving after hours because that can typically mean this is what's going to happen the following day or give some type of indication of what could potentially come pre-market the next day. So how do I go and find out what stocks were moving, what news was out, all that good stuff? Obviously, of course, I had the alerts. So, don't mean to self promo, but we worked hard on making those bad boys. But let's take a look at this. So pretty much, this is what the admins are looking at for today, and I'll post mine in a minute as well too. I hope you guys like that new system, with me and the admins, kind of conjoining all that stuff. But pretty much this is what happened, after day. And you'll see a lot of times what they have on their watch list is kind of similar to what mine's is as well too. Um, that's just how, momentum traders are, pretty much the same way. But yeah, so you got that to look at. But one of the main things I like to do as well too is go to, let me pull it up here. I think I actually have a bookmark now. It's the stock market watch. And I can take a look at, let me just pull it up here. The after hours stuff. Pretty easy. You go to after hours, you'll see top gainers and top losers. Now, you can utilize these both to your advantages, okay? Depending on if you're a bullish trader or a bearish trader, you can utilize it how you see fit. So what I look for here is for stocks within my price range. Now for me, it's usually, 20 or $30 or lower. Okay. Every now and then we'll have an anomaly where we might look at an overpriced stock or a more high priced stock. But for the most part, if it's $20 and below, I want to look at it. So that's one criteria. The next thing I look at is for a lot of volume. I don't care about something that only traded 100 shares after hours. I really don't care too much for something that only traded 29,000 shares after hours, honestly. It fits my price range because it's only $6.99. But I also want to see that it had at least 100,000 in volume minimum, and I'm very particular about that. It depends on the stock. On average, I wanted to see that it's below $20 and that it had at least 500,000 in volume traded after hours. Now today is Thursday, tomorrow's Friday. We all know how Fridays are in the market, and of course, this is really Thursday is usually like the market's Friday because traction starts to die down. Today was a red day, so clearly there's not going to be a lot of top gainers after hours that had high volume because there was no reason for them to run, right? Obviously, like if I was a bearish trader, I would probably pay attention to IRNT because look how many 2 million shares traded after hours. That's great. That's good value. This one might be okay. That's Norton. Yeah, Norton LifeLock. So but here the only one I'll probably pay attention to is HLBZ, maybe DPW. That's about it. Those two pretty much, everything else on here, I don't really care for. But usually when the market ends green, there were some good runners and there's some movement after hours. A couple of these are in the, millions of volume traded. And I want to put those on the watch list because I'm looking for continuation there. But similar to like, what the admins were saying, I'm going to be looking at probably like stocks like CEI, blah, 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 ITRM, AZS, because that was, that made a little bit of move. But that's about it. Or I'll look for something that has some news. And you can, whatever source you use for looking for news, use it. That's fine. Um, you can go on Thinkorswim like I showed you guys in um, the last workshop. Look on the side where it has live news. There's always, different things going there. You can look at those stories, see if there's any stocks you want to look that way. And what you want to do at that point is jot them down on your watch list. You should be having a watch list, okay? And it could be something as simple as having a notepad and just saying, okay, on my watch list, I'm going to have, CEI, TEDU, GROM, et cetera, et cetera. And when it comes to your watch list, I would suggest you put those in your trading journal as well too, just so you can know, because a lot of times whatever might be in your watch list, you might actually trade in your trading journal. So you should know why you were looking at it in the first place. Okay. So now that you've done your watch list and your reasons for your watch list, you don't have to jot down your reasons. I do, just for the heck of it, for you guys to kind of give you some insight of what I'm looking at. Um, but it's up to you. That's completely optional. You should already know why you're looking at a stock on your watch list anyway. But if you need to write it down to remind yourself, that's perfectly fine. Um, I didn't even get in that JCS trade for that special dividend, but that's okay. I'm not worried about it. It'll be another one. Sorry, that was just a random thought. I just kind of looked at a note here. But anyways, yeah, watch list. That's what you should be doing to prepare for the next morning. Okay. Um, and once you got your watch list done, that's it. You wake up for the next day. You get ready to, you know, execute. You come to the market prepared or don't come at all. Because if you do, they take your money. All right. Um, that's pretty much how I end the day. And usually I'll send out the watch list to you guys too, and all that good stuff. I need to get to work on that here in a second anyways. But yeah, guys, that's pretty much it. So let's kind of recap this workshop part. So trading day is done. You're all good to go. Now you're making your trading journal entry, date, times, entries, exits, blah, 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 what you did wrong, what you think you might have done right, et cetera, how you felt. Um, Take a look at it, perfectly fine. Now you go over to, stockmarketwatch.com. You look at your after hours gainers, losers, whatever you want. Make a plan of how you're going to approach it. I might actually, I might actually try to short this. This isn't financial advice, guys, by the way. But anyways, you look at your top losers and top gainers. Make notes of what might carry over to the next day, and then you just get ready for the day, for tomorrow, and then you're gonna repeat that process over and over and over every single day because eventually you're gonna get tired of doing this so much that it's gonna become so textbook to you that you're gonna be much better at it every single time that you do it. Okay. Um, if there's times where you can't trade because of the PDT rule, do this as a paper trade strategy. I did it a lot. Um, I would paper trade it just for getting ready for the day that I would have, enough in the account to be able to do it consistently day after day and not worry about the PDT rule. It's better for you to practice it now than have to practice it later once you have money to do so. Trust me. So yeah, do it day after day. Obviously, if you can't, we all have lives. You guys, you have things to do, work and stuff like that. That's fine. The next day that you get the opportunity to do so, just do this process. It's okay to take a break from doing it. Just try to get back into it. Okay. And this is repeatable at any point in the time that you're trading. It's not like you gotta wait for only the months of September, October can I do this, or only the months of February to March can I do this. You could do this at any time. You should be doing this every single time. Every trader that I know that's successful does this. Okay, and this only takes once you get in the habit of doing this, this might take you about 10 to 15 minutes at most. The watch list takes me a little bit longer to do because I'm doing like in-depth research. When I see that a stock has moved, I'm looking at news that happened with it. I'm reading message boards, looking at social media to see if it's mentioned anywhere. I'm doing that little more diligence and research to see if it's even worth me to even look at. Okay, because sometimes this won't always there won't always be stocks for you to trade. Like today might be a day where I'd be like, oh, there's really nothing to trade, but I do still kind of want to look at like CI and all these other stocks that I'm going to put on the watch list for you guys. But I'm just letting you know, just because you do it every day doesn't mean you have to actually have a bunch of stuff on your watch list. It's been times where I had nothing on the watch list because of the fact that I personally didn't see anything that I could trade, okay, or that I wanted to look out for. But, you know, who knows? Every trader is different. You might have one that you have every day. That's how it goes. All right, guys. So, look, I hope this workshop worked out for you. I hope it was very informative. Again, trading journal, trading journal, trading journal. Plot your trades, review the trades, plan for the next day, calculate the odds at the end of the week or end of the month, how your strategies did, review those changes, implement those changes. All right. If you have any questions about it, just message me, email me, whatever you want. I'll put the links in the video for you to be able to sign up with TraderView and Edgewonk. And like I said, message me or email me or comment below if you want to comment below the video. Say, hey Eric, can you send me the Excel file? And I'll directly message it to you. I'll see it on the little alert. So that's fine. All right. All right, guys. Until then, stay green.